All right. Good evening, Albert's List. It is Friday, June 5th, 2020. And we're here today talking about some of the things in relation to the jobs report that just came out, as well as where we stand economically. Haven't done this since late March. We're pleased to welcome Armand back. He'll be on here in a really quick moment. And in the meantime, I hope that you're all safe. I hope that you're doing well. It's been a tough week for America. It's been a tough week overall for a lot of us over here. And, as a reminder, we are a community that fosters diversity, that is focused on helping people gain and get what they need in the world that we have today. And so today we want to talk about a couple of things. I want to first talk about the May 2020 jobs report and what went down with that. Understanding the stock market a little bit better, since we've had a couple questions on that over the last couple of weeks with regards to the stock market and its precipitous rise and whether it actually correlates to anything at all. Upcoming stimulus bills and expectations, and then any of your questions for whatever is coming up next. And, where we go from here. Does a really, really good jobs report mean anything at all? And, all of that kind of stuff. So first, Armand, welcome. Thank you for spending some of your Friday evening with us, with our community, as you always do. And tell those who are joining in for the very first time who you are and what they should know about you.
Sure. Quick technical issue. I don't know if I'm showing up on the feed. I only see you when I'm looking at the Facebook Live. So
you are showing up. You are showing up.
Okay, great. So my name is Armand Domalewski. I'm the unofficial chief economist of Albert's List, and one of the I've worked in public policy economics for quite a while, and it's I think a really interesting and difficult time in our economy, obviously. I work for Calbright College, which does labor market, workforce development, job training, stuff like that. And so I've been really knee deep in the economics. I think this jobs report, I'll be honest, it is surprising. And there are some really good surprises, but also a lot of things in it that make me nervous. Some big sort of numbers takeaways, if you look at the top line numbers. U.S. economy added about 2.5 million jobs, so the unemployment rate went down to 13.3%. Although I feel like people are so excited that things are better than expected that they sort of forget that 13.3% is still really bad, right? We were at 3% before all this started, and in April it was 14.7%. But that said, economists are predicting up to 20%, and it's significantly less than that. If you look at specific sectors, leisure and hospitality actually added 1.2 million jobs. I don't think this is because leisure and hospitality necessarily rebounding. I think it's more that they really overcorrected. They panicked and fired a bunch of people in April. They fired almost 8 million in April. But so while unemployment in hospitality and leisure is down to 36%, it's definitely so it's around 36%. It's not as bad as it was in April, which was 40%, and so it's ticking slightly upwards. But if you compare it to May 2019, it was 5%, right? So it's still a huge gap, but people sort of in hotel and leisure industry overcorrected and were it's the end of the world. Oh, maybe it's not as bad. And other sectors have actually added jobs on balance. So construction added 464,000 jobs. Education health services added 424,000 jobs. You actually saw large companies adding jobs. One of the interesting things actually is that mid-sized companies lost employees, and small companies also lost employees. And so most of this growth is happening in large companies. Small and medium-sized companies are kind of really struggling.
And so with that, knowing that small businesses are the backbone of our economy, a common line we hear from our politicians, what does that mean for really, I guess, the state of everything? Because I know we've lost a lot of cherished institutions here in the last couple of weeks, right? For those of you who live in the Bay Area and are watching, specialties is a favorite of many people. Their chocolate cookies being, very legendary. We've also lost, buffets um, like what is the name of that? It's
Hmm?
Sweet Tomatoes. That was one of them that also went away. And then you've got a lot of smaller institutions in San Francisco, like ice cream parlors that people have known for generations.
Can you hear that, Albert?
I can hear that. I can hear
This is
that.
for specialties. R.I.P. specialties. Those cookies are amazing.
I wouldn't have believed it if you told me that Celine Dion would make an appearance on an Albert's List webinar, but here we are.
It's been a long. I don't mean to be flippant, folks. It's more just I think
And
Albert
Krishna
can
mentioned,
agree.
the loss of Saddle Rack in Fremont, right?
Yeah.
Everybody, maybe the Bay Area's only place where you could show up in, some nice cowboy boots, a cowboy hat, and be taken seriously.
Yeah, it's a shame I never even knew that place existed. Now I really want to go.
Yeah,
We have lost a lot of like local business formation, and I think that's largely because, they're always going to be small and mid-sized firms are going to be the most fragile for economic recovery.
yeah,
They're the first to hire new people because they're growing and they hire the most people, but also the first to shed versus
yeah,
larger institutions. They can weather some blows over the longer run and
yeah.
try to make it more that they also tend to have access to more corporate financing. So the Federal Reserve,
Hmm.
provided sort of like cheaper loans called the Main Street Lending Program to mid and large corporations, which is just like much harder for smaller corporations to access, unfortunately. That said, I will say that one of the other warning signs I have for small companies too is that a lot of the like jobs here that there's like a significant increase what's called like not unemployed but
Hmm.
absent jobs, which is essentially people who are like still employed by the job but for whatever reason not doing the job. And I believe that Adam Ozimek, who's a economist, works at Upwork, which is like a internet startup that does a lot of like freelance work, but they have access to a lot of economic data. His analysis is that a lot of people are essentially on this PPP program, so they're still on payrolls, but they're not working. And the concern is if the economy doesn't pick up quickly enough, once those funds run out, they're going to go on unemployment, or they won't be able to find a better job. And so there's this very big, what I'm really concerned about is that Washington will take this the wrong way and be like, oh, job's done, we can pull back, when it's only like sort of started to recover. Um, yeah, that is sort of my really big concern.
So I think the first thing is, and thank you for that. I think that's a really good high level overview of what's going on. But I think for our audience today, let's separate the hype from the reality for what's really going on in this job situation. I know that I have almost two camps of people that I know in my life. We have the people who are looking at this jobs report and they think that the economy has roared back and that we're on our way to sub 10% unemployment and we'll hit that before election day and their choice of president is going to win and win resoundingly. And that it's time for everyone to get back to work. Coronavirus is over, regardless of how you feel about a vaccine being available or not. And then you have, on the other hand, the group of people who are looking at everything with skepticism. That we only gained 2.5 million jobs last month because people came back to work and economies reopened, and these are not new jobs per se being created, but rather jobs that existed in the first place that people are just coming back to. That we have a second wave on the way, and it's already here because so many of us were protesting this week out in the
Mm.
streets because of George Floyd's death, and that with ongoing economic troubles and tensions with China and beyond, that this type of volatility is going to continue. And then maybe
Yeah.
the third party that just looks at all of it but they notice that their 401k is rising because the stock market is already 6 months ahead in the future. And so how does the average job seeker who's watching this right now, who has a regular 9 to 5 job, making, the average of whatever one does in what one does here in the San Francisco Bay Area, and is thinking
Yeah,
about the future of their job prospects, how do they make sense of all this? Because there are so many angles, and for the economic
yeah.
geeks like you and I, like, we can see things from 3 ways because we did high school debate, number one, and number two, we just like to look at every angle.
Absolutely. By the way, somebody called us out for not having a drink, and I'm trying to rectify that, which is why you're getting some of this moving camera. But yeah, so I mean, a couple things, right? One is I think it's like very, very flat. One thing I can confidently say is like this idea that the reopening is what's causing economic recovery, even if they're, let's put aside whether it's a real recovery or not. There's sort of two reasons that that's just not true. One is if you look at credit card spending data, I need to provide charts for these things. I'll do that next time. So if you look at credit card spending data, you'll see that the states that imposed lockdowns and the states that did not impose lockdowns, there's very little difference in their spending rates, right? Like most of the actual lockdown behavior was not caused by like government policy around lockdown. It's just people voluntarily being like, we don't want to spend money right now, we don't want to go out, we're afraid, etc. Very little of that factor is caused by the actual, like, this is why you're sort of seeing, for example, I think some states that the significant lockdown versus some that didn't, there isn't a huge difference in their coronavirus infection rates because people generally acted consistently regardless of what the specific individual policies of states were, right? So the second thing is that the lockdown removals only really started towards the end of May. And there's nothing in this data that indicates that like things are really terrible for all of May. And then at the very end, in the last week, something magic, right? Like that's just not how it works. And so what I do think is true, and I think this is proven by sort of the really weird statistic that while unemployment surged, incomes actually increased from the median American. And I think that's largely because the unemployment insurance expansion finally started kicking in and provided $600 more per week for most people. To put that in context, like that is for most Americans, would be a pay increase over their previous job, right? That can't last forever, obviously, and but is able to sort of like sustain economic spending as folks sort of anticipated that the economy is going to recover. I think that that is really underrated. It's one of the reasons why the reason the stock market didn't fall is because it wasn't as delusional as people thought. Because if companies were like bleeding money and investors kept being like, oh, they're fine, that suggests like, oh, something's out of whack, right? But companies were still, they took a hit because consumer spending did go down, but consumer spending should have gone down way more given how many people lost their jobs. And I'm
Mhm.
fairly convinced the reason that didn't happen is because a lot of people, eventually, a lot of folks struggled. They're still struggling because the EDD infrastructure is terrible. But a lot of people got more money in their pockets for a period of time than they were getting before. And combined PPP, which finally went through, helped people stay on the payroll even if they weren't actually working. Like through a combination of things, like we were able to sort of sustain spending. I will say that, this is the fastest like recovery. Usually if you take such a big hit, historically things have continued to go down for a longer period of time. If we could maintain this rate of recovery, that would be wild, right? But the problem is that it was sustained
It
by
would be
huge
the
intervention.
V-shaped,
Yeah,
U-shaped recovery that they've been trying to
exactly.
tell us this whole time, which in that case, if that's true, I hope you bought low and can enjoy the highs once we get there.
Yeah. But I do really hope that policymakers don't like prematurely step on the brakes. I think a smart policy, if you want to balance concerns about long-term debt and growth, is that you create essentially a system of like optional tranches of spending where you say like, oh, well, if economic indicators get this bad, we'll spend this much. But if they start getting better, we can start
Mhm.
pulling back on the spending. But instead, it looks like they're ready to sort of just declare victory. And purely on the economics, that's a concern, but also like, you know, I 100% like support these protests, to be clear. Like I've been protesting, I think it's super important, but you don't have like that much chaos in the streets without a hit to economic growth, right? And so
Yeah, yeah.
that, and the potential of like, yeah, like it's not like coronavirus went away, right? And hopefully the fact that people were wearing masks and it was outdoors should limit the spread. But if it doesn't, like,
Mhm.
again, the disease is what drives, if you look around the world, right? Like it's not really government policy that has driven how people have reacted to the coronavirus. It's the virus, right? Like you need, and so the virus sets its own schedule,
The
but
virus
not
sets its
us.
own schedule. Yeah, no, that's very correct. And so and so I think that based on that, just before we go into a little bit of the stock market here, is that yeah, I think that it seems like there's a little bit of both where that does signal that the economy is opening up, and that is a really good thing for all of us. I think that if we open up too soon and get rid of that stimulus, and we'll talk about that in a moment, we're also
Yeah.
going to see, and you know, you're going to see the return of this phrase. Do you remember during the first Obama presidency, when everybody feared a double dip recession? Um,
Yeah.
I feel like you're going to get that because you're going to open up. Everybody's going to want everybody to go back to work, and people aren't able to go back to work, or they're too afraid to go back to work, and they're also still on, you know, some kind of unemployment, or they're willing to not even take unemployment because they're safe. And
Yeah.
so when all of that happens, and you know, maybe we see something like that and we see the effects of it take hold in like August or September or October, that would make for a very interesting October surprise, to say the least.
Yeah, it's gonna be. I mean, part of me doesn't almost does not want to make predictions because this has been such a. I remember when Tom Hanks got the coronavirus. Like, when was that? 10 years ago. Like,
Right,
my
yeah,
God,
yeah.
everything changes so fast. Like, maybe aliens will invade us in October. Like, who knows at this point? But if we are going to make predictions, I think we are putting ourselves at risk. And to be clear, by the way, opening up, you kind of not, I don't think it's wrong, but you kind of, to clarify, there's sort of two elements, right?
Yeah,
There's the like, how are we letting people out and do conduct business and so on, the physical opening up. And then there's the, how much do we stop, like sort of reduce government intervention and feel like the economy is recovering, growing on its own.
yeah,
Um, it doesn't, you could do both, right? Like you can stimulate the economy and open up more, or you could stimulate the economy and not open up more, or like there's like two choices you can make. It creates almost a grid of 4x4. My
yeah,
preference is to say, go by the medical science and go by economic indicators and kind of like pace it out as things improve. And what you've seen a lot of places around the world is like South Korea, for example, they were one of the best in the world on handling this. But then when they had another outbreak, they're like, okay, we need to close schools again for like 2 weeks, right? And then
yeah.
they started to reopen. Like, it's going to be a bit of a dance for a while. But I am concerned that I think there is just a lot of pent up demand to be out. Like, people were, I mean, if you saw the atmosphere in a lot of these protests, frankly, it was like a street party, and I get it. Like, people are
Yeah.
just so happy to be out and with other people. Um, and I'm
Yeah.
worried that, like, and you're seeing the lockdowns end in a lot of places. And my big concern is, it's a big gamble. It's like, well, we do know that in general, it seems like the virus spreads less in summer weather. So hopefully, with masks in summer weather, it'll be enough to prevent a huge resurgence. But if it's not, you're going to have a situation where people are just fed up with the lockdown because they're ending them everywhere, and people are getting sick as hell. And I don't know what happens then.
Yeah, yeah. Which is going to be why the second half of 2020 will be very interesting in anticipation of just what goes on over there. We do have a question Danish
Sure.
asks, when is it a good time to start applying again for positions? I think my answer for this one is that right now is a good time as any
Yeah.
to apply for positions, especially if you just need that job. It's super competitive. And if you're waiting for it to be less competitive, really and in that case, if you're waiting for a 3% unemployment rate to try again,
Yeah.
then you probably have to wait until about 2029 for that to happen.
One of the things the research shows, by the way, unfortunately, I think it's really unfair, but um, gaps in resume are seen by employers pretty negatively. And
Yeah.
one of the reasons that people who graduate in a recession tend to have permanently lowered wages is because it takes longer for them between graduating and getting a job.
Mhm.
Um, and that initial gap in time um, basically puts them behind on the career ladder a little bit. And then over time, you're sort of like losing time for promotion and advancement. And you are also just like, it's harder and harder to get a job. So the quality of job you're likely to get is going to be lower. Um,
Yeah.
that said, there now do exist programs. I think Facebook is actually doing a great job with their return to work program, where it's actually actively targeting people who have been gone from the workforce for a while. But I would say in general, like if you can get a job that is better than your current situation and is safe, you should be applying. That said, if you think you need to like spend more time upskilling and so on, like, you have to make that calculation yourself. And I get it. By the way, plug if you want a certification in IT in our California residents, go to calbrightcollege.org. Tell them Armand sent you. I work there. 100% free to students. Second thing though is we're actually, we're working on it, but I anticipate likely we'll be able to announce some, hopefully some new programs in other areas that are, I think people will be really excited about, but I can't say more than that right now on here. But yeah, I mean, upskilling, I think you're seeing a lot of like online education is exploding, micro
Yeah.
credentials are exploding. People are getting not people have tended to think of this as like, oh, I have to go back to school for 4 years or 2 years, but more and
Hmm.
more so you're seeing more like people will get a certification for like a specific skill, and then learn that skill and apply it and sort of stack those up.
And this live video is brought to you by Calbright College. No, I'm kidding.
Hey man, I don't mind showing for Calbright because if anyone here is a California resident, like it's
Yeah.
taxpayer funded, so it's your money. Like
Yep.
use
Yep.
it,
Yep.
right?
Yeah, absolutely, absolutely. Before we move into the next section here about the stock market,
Hmm.
Elizabeth says, please wear a mask and try to social distance if you're protesting.
Absolutely.
And Priya says, unemployment is fun for now until January hits when everyone is looking for work once EDD is dry. So
Yeah.
yeah, I mean, it's going to be really interesting. We just got to stay present and see where we go towards here in the future. Yeah, let's talk about the next thing here. That would
Sure.
be the stock market, right? So we touched on that a little bit earlier, and we're in the midst of a really interesting time because the
Hmm.
Nasdaq just hit its all-time high today, I think, and I think the S&P 500 is above its 90-day moving average. You've got stocks in air travel and all this stuff up all over the place, and if I look at my own investments here, because I've done a fairly decent job, I'm up 19% on SPY, and over the last like couple of months, I'm
Wow.
pretty much up 10%. Now that doesn't make me, that doesn't make me the Wolf of Wall Street by any stretch of the imagination, but it's really interesting to consider because while everybody seems to while there seems to be a lack of jobs out there, while there seems to be this sense of calamity, the stock market continues to go up. And my belief is that the stock market is 6 months into the future where they think that everything is roses. We've got a vaccine and it's doing
Yeah.
fantastic. And I think the one moment we maybe get that vaccine, you could probably think about the Dow going over 30,000 points and we'll be really, really happy by then. But for all those who are watching and just wondering, like, what is the deal here? Why does the stock market keep going up despite the fact that we have a 13% unemployment rate and all of these things that are going on?
So I think it's like you said, a big factor of it is sort of looking forward into the future. I do think the other thing is that the way that a lot of stock prices are shaped,
Yeah.
is by investor as an analyst, constantly looking at data and talking to companies.
Hmm.
So not only do they publish their quarterly earnings reports, you can kind of infer economic activity from a variety of indicators.
Yeah.
And what they've been seeing is that, you know, it is really, I think people really undersold. I know I feel like a broken something record when I talk about this pandemic UI, but it is crazy. It is straight up crazy to see a combination of such increases in unemployment, but then also personal incomes increasing. Like that has never happened. And
Yeah.
people, I think sometimes people forget because a lot of people focus on this $1,200 stimulus check, but they
Hmm.
forget that most Americans, like especially living in the Bay Area, you forget most Americans' median incomes are like $40,000 a year. And so increasing take home pay by $2,400 a month is a huge increase. And so companies, people were still buying things because they were anticipating that this is a man-made disaster. It's kind of like after a hurricane, you
Yeah.
know, one of the reasons that the financial crisis in '08 was so protracted was because it was tied up to a lot of assets like your home and so on. And so it was a like deeply structured long-term problem versus this is a, well, things are bad now because of this virus, but hopefully it'll go away in a while. So I'm not going to like really panic and sell all my stock and cash out my, all my money from the bank. Um, at the same time, maybe even though I lost my job, like I'm only temporarily furloughed, right? You see a lot of these numbers of unemployment. The thing that really scares me is like that number of people who say I am still employed but absent from my job. If you add that number in, it adds something like 67% of unemployment. So it's a question of like, will those jobs come back? And basically, while folks have kept spending, companies have kept earning, and that has sustained the stock market average, especially because tech companies have done phenomenally. So if you look at like the S&P 500 and the stock market index, most companies that are not like the core tech companies have actually done like they're improving, but not as well, versus like the core tech companies have like skyrocketed, except for Slack today, weirdly enough, which is odd. But um, so a lot of the growth and is sort of disproportionately driven by that industry. Um, that said, I do think, frankly, the market's a little too optimistic. I think the
Hmm.
market tends to be, a lot of investors, to be frank, are Republican and are a little bit optimistic about the ability of a Republican president to deliver good policy. And I think and this happens, by the way, in the reverse. When you have Democrats, people tend to lose a little bit of their rational investor ability when they put on partisan blinders. Um, I don't know. I just think there are too many uncertainties. I'm not saying here confidently things will be terrible. What I can say confidently is that people are too certain given how much volatility there has been. I mean, if you look at the charts in the market right now, like you've never seen such big declines and rises. Although there's also one, I'm rambling, but I just want to say this last thing. There's a terrible chart, horrible chart that showed a flat line, then 20 million down of lost jobs. And then to show that 2.5 million jobs recovered, instead of going up 2.5 million, they went back to the zero and then went up, which if you look at the chart, it looks like we lost 20 million jobs and then regained 22, which is not true. It's like I studied and work in economics, so I get very mad about bad charts. I'm sorry about chart rant with Armand Domalewski.
Oh my goodness. Yeah.
We've lost our entire audience, haven't we? It's
We're
like
down to
Armand,
four. We're down to four people, so I think you need to be a
oh
little
my
bit more
God.
exciting.
Ah,
Priya says, I bought more Bitcoin today. So, I mean, yeah, I think like if you have that disposable income to spend the money to ingest into the stock market and enjoy these gains, enjoy them while you can. I'm wondering whether I should take profits or not, but this is not a stock market show. So, as much as I'd love to get into that, I don't know that it's quite the right place to do so, you know?
I mean, I
But
think while stock market talk is interesting from the financial perspective, I think one of the reasons that a lot
yeah,
of people are hurting, they don't have, I mean, I don't have any stock investments. Like I'm still getting out of debt from student loans and all of that.
yeah,
So
yeah.
I think for a lot of folks, it's still a scary and uncertain time. The stock market is an interesting puzzle intellectually, but for
There
most people,
certainly
the
is.
practical reality is much more visceral and much more scary. That said, please, like, if you want to invest in Bitcoin, go for it. But like, Bitcoin is so hard to predict. Like, were saying during when the economy was doing well, they're like, buy Bitcoin because the economy is doing well. When the economy did poorly, they're like, buy Bitcoin because standard fiat currency is bad. And then when the economy is recovering again, they're like, buy Bitcoin because the economy's like, no matter what, it seems like Bitcoin.
I'm still waiting for my $40 of Bitcoin to go to 50K. So, there's that. Yeah. But I mean, yeah, the market's interesting. I just shared an article here too, where like, where Bay Area boat sales are also at an all-time high. So if you want to get yourself a yacht, the oversupply of it may mean that with low demand, may mean that you could get a pretty good deal, and we could host one of these job mixers out in the middle of the bay if we wanted to do that.
That would be amazing. Oh my God, Albert's List on a boat.
Yeah.
That would be incredible.
And Priya says Bitcoin will hit 100K by December 31st, 2021. Bookmark this.
Hey, Priya. First of all, is Priya's actual name Cash?
I don't know.
That would be hilarious. If her last name is actually, you know what? As somebody who really loves Bitcoin's last name is Cash, like, that's perfect.
It's perfect.
I'm not even making fun of her. Like, that's just great.
Let's not make fun of our viewers this evening.
No, of course not.
But let's go to the next topic here really quickly.
Sure.
And so I think the final thing I want to talk about in today's economic report, and of course, if you wanted to add anything in addition to that, is to probably talk about maybe the most important thing, which is our upcoming stimulus bills and expectations for that. We covered this a little bit earlier. You had mentioned that maybe Mitch McConnell doesn't have as much of an appetite for more stimulus because he thinks the economy may have opened up. However, there are also dueling bills within Congress right now that do everything from give people $450 a week to $2,000 a month, which is really interesting and generous. I mean, I know you and I may not get any of this money based on our tax returns from last year, but I think if we're giving people $2,000 a month and that money goes back into the economy and helps grow profits and goes to people who actually need the money to spend rather than people who want to hoard that money, that seems like a really good idea going forward.
I mean, speak for yourself, Albert. Not all of us are, hoity-toity like you. I got my $1,200 stimulus check. It was great, but
yeah, I
immediately went to paying off debt. So there you go.
Yeah, which is exactly what it was meant to do. Like, it was pass-through income to that effect, where you're getting it and then you're spending it on all the things that you need to spend it on. So,
right.
But yeah,
I'm just gonna say, you and I are both alumni of Santa Clara University, so you're welcome, Santa Clara University, for my stimulus check for the student loans. But the stimulus bill.
Father O'Brien is very grateful for your one-time payment.
So Mitch McConnell actually released a statement today where I was a little worried that they basically said, like, we're done with stimulus, it's fine. Mm-hmm. They are paring down expectations for it. So they're saying we need to be laser focused, but they are still like leaving the door open to future relief, saying they need to be focused on schools, getting workers back on the job. And they're looking, but what they said is they were taking a careful look at a fourth and final bill, and the decision will be made in about a month. I frankly think that's waiting too long, but we shall see. The Democratic legislation version of this bill hopes to extend basically pandemic UI, the $600 extra week through January. Right now it's set to expire in July. Senator McConnell, the Republican, says he does not want to do that, but he also said Congress will still help those who are unemployed. So it's kind of hard to read what he means there. President Trump has also advocated for a payroll tax cut. So this is something that actually, even for a higher income earner, payroll tax would help a lot of folks. They'd stop taking payroll tax out of your paycheck. And so that would, although it would help a lot more folks who are higher income, because you tend to pay more payroll tax if you're higher income. There's also Trump, I think, just because he comes from the entertainment industry and casinos, has been very laser focused on allowing companies to deduct more restaurant and entertainment spending. So if you're like, maybe your company will take you to lunch more and take you to the casino more. um, it's an odd thing, especially given the fact that
Why
the
don't my
leisure and
company just
hospitality
give
did
me
a
more
lot better.
money to, play the stock market? Oh, right. That's their 401k contribution.
So
Yeah.
it'll be interesting. I frankly, if I could wave a magic wand, one of the two big priorities I would have, one, I think this pandemic shows us that like America just needs to significantly increase investment in science research.
Mhm.
Like we just do not have if you look at like return on investment for government spending, very little compares to just like basic science research. Like the entire internet, all the technology we have here is because of government investment in like fundamentals of the internet decades ago. And it's something that like is very timely. We need more innovation in science and technology, and would have big economic benefits. I think the number two is like helping people transition to a world in which is more coronavirus adapted. I don't know if the coronavirus, when it's going to go away, when it'll be solved, but what I do know is that we need to build a world that can better anticipate situations like this, right? Like,
Yeah.
who knows when the next virus hits? Who knows, like, what the world will be like? And so we should try. There are a lot of one of the things that actually broke my heart. I was reading data today about education, and there's this online math sort of assessment provider that has a big sample of students across the country based on various economic levels. And what they found was that affluent families actually basically were lost no educational gains during this time period. Like they were able to adapt to remote learning pretty quickly.
Mhm.
Middle income and lower income families, the education gains have like fallen apart. Like these kids are falling behind, and
Yeah.
that's going to cost us
And look, like,
generations from now.
we have one person watching this video now, so I might as well
Oh,
just put it all out there that, like, during times of economic downturn, it's um, it's the it's the consolidation of wealth that number one happens, and number two, it is the less affluent who are impacted due to the fact that their costs go up because they have less costs, less money to be able to come in. And
yeah,
so I think, moving forward, we're going to see a lot of those patterns, right? You're likely going to see the with the cessation of stimulus funding, that people are going to be kicked out of their rental properties. Homes
yeah,
are going to go into foreclosure. We're going to have that double dip come back up, and hopefully we have enough people around here to convince Mitch McConnell, even though he's become really powerful, to say that, hey, we need some kind of secondary stimulus just in case. I mean,
yeah,
I'm not rooting anywhere around here for a bad July or August jobs report, but
right,
if anything, we need that extra boost so that we can get ahead like that. And so the next couple of months are going to be really crucial. I think somebody in our jobs groups today, in our group today, said that July and August are going to be tough. And so
yeah,
it's kind of like, to quote one of those phrases that President Trump loves to say a lot when he talks to the media is "we'll see," quote unquote, right? And so he says it in the most annoying way, but we'll see, we'll see.
yeah. I'll just say, extend the offer to whoever's watching who might watch this in the future.
Yeah,
Albert and I are here to help. Whatever we can do to either work with you on getting a job, helping
yeah,
you get your unemployment benefits, anything. Like we're all in this together.
yeah,
Especially in times like this, I think we really need to stick together and appreciate this community. So
yeah,
thank you,
yeah.
Albert.
So, any final thoughts before we log off for Friday night? And if everyone wants to listen to some of your and more of your economic thoughts and your hot takes on Twitter, and your arguments with people like Mark Andreessen, where can they find you?
They can go to twitter.com/Armand Doma. You don't link it to Albert, so people can't click through. It's friction. Anyway. And then second, my newsletter, armand.domalewski@substack.com. I mean, sorry, armand.domalewski.substack.com. The I would say my Twitter has been blowing up recently because I made a meme about Darth Vader and Senator Tom Cotton that many people enjoyed. So check it out.
Armand's a big deal on Twitter. Twitter,
Oh
everybody.
yes, oh yes, such a
Yeah.
big deal. My girlfriend made fun of me. She's like, Armand, are you still looking at how many likes you got on that tweet? I was like, maybe. She's like, you spent an hour doing something that most people could do in Photoshop in like 30 seconds because you don't know how to do graphic design. I was like, but it's funny. Anyway, a little too real at the end of this at the end of this live stream.
Hey, we got 4 people watching, so it's all good. Yeah.
All right, folks. It's been great. Nice to see you, Albert.
Nice
Hopefully
to
we
see
get
you
to
too.
one day see each
Yeah,
other in person.
it will happen. And my final takeaway is that hopefully this is all the beginning of a great economic rise, that America is on the comeback trail, that we will see America be great as it always has been and become even greater, and that everyone who is watching this and beyond within this community can find their job and be economically sustainable, because this is what Albert's List exists and stands for today. So for those of all of you watching, thank you for your time. Armand, you get the final word.
All I've got to say is keep up the pressure on your elected officials to make sure they do the right thing and keep supporting us, and to keep watching. We're here to help. We're a community. We're spending our Friday nights doing this because we care about each other. We care about you. I know it's difficult and stressful time. I think especially for people who do not share my skin color. You know, whatever, obviously we all face different challenges and have different circumstances, but I know it's hard out there, and I want you to know that we're with you. Yeah, I didn't mean to get so sappy, but yeah, I'm grateful for the community and support we have, and support and community in Albert's List. So thanks everybody, and we'll see you soon.
Wonderful. Thank you. Have a great Friday, everybody.